While most of the market has been totally focused on stocks and all the usual big names, one asset has been on an absolutely incredible tear this year. We're talking about silver. And when I say incredible, I really mean it. As of late 2025, silver has posted a return of over 100% year to date. Think about that. It's one of the top performing assets on the entire planet. So the big question is, how did this even happen? You know, gold usually gets all the headlines, right? It's the king of precious metals. But silver's recent performance, well, it points to a powerful, kind of hidden story that most investors have been missing. Today, we're going to uncover that secret. Okay, so the first crucial thing to get your head around is that silver is fundamentally different from gold. It kind of lives a double life, what we call its dual identity. And honestly, this is the absolute core of why it's so interesting right now. So on one hand, silver has been money for thousands of years. It's a store of value, a hedge against inflation. Some people call it the people's money. But on the other hand, and this part is critical, it is an irreplaceable industrial necessity. It is the most electrically conductive metal on Earth, which makes it absolutely essential for the technology that is powering our future. The best way to think about it is like this. Gold sits in a vault. It's basically a savings account, protecting wealth. But silver is actively consumed. It's a component that gets used up and disappears forever into solar panels, electric cars, and AI data centers. You literally can't have a green energy revolution without it. And this brings us to the second massive driver, which is where the story gets really, really interesting. It's a tale of simple economics, supply and demand. But in silver's case, it's creating a perfect storm. And the sources of this demand are what make it so powerful. It's not optional. Solar panels, the biggest industrial consumer, simply do not work without silver. EVs use way more of it than gas-powered cars. And the entire AI and 5G revolution runs on chips and components that require silver's unique conductivity. This demand is non-negotiable, and it is exploding. But there's a problem, a huge one. While demand is just rocketing upward, the supply side of the equation is telling a very different story. For 5 straight years, the world has been in what's called a structural supply deficit. That means we are consuming significantly more silver than all the mines in the world can produce. This isn't just a one-off event. This is a long-term structural imbalance. So where's the market getting the extra silver? Well, here's the issue. Mine output is basically flat. It's incredibly hard to find new high-grade silver deposits, and miners can't just flip a switch to produce more. So to fill that gap, the market has been draining the world's above-ground stockpiles. But those inventories aren't infinite. You see the problem? Skyrocketing demand is meeting flat supply. The squeeze is on. The third driver is less about industrial mechanics and more about human psychology. It's about why, when precious metals get hot, investors seem to flock to silver. Silver has long been nicknamed poor man's gold. Now, while the name might sound a little dismissive, it actually highlights a key advantage: accessibility. An ounce of gold costs thousands of dollars, but silver is affordable for the average retail investor, allowing more people to own a tangible, hard asset. The lower price point is obvious, right? But it's the other factors here that get really interesting. Silver is far more volatile than gold, meaning its price swings are much wilder. But historically, that volatility cuts both ways. During major bull markets for precious metals, silver has a track record of outperforming gold, often by a huge margin in percentage terms. But while the upside case is super compelling, you absolutely have to understand the risks. The price of admission for those explosive gains is volatility, and let me tell you, silver is not for the faint of heart. So let's be crystal clear about the potential downsides. You have to be prepared for brutal price swings. I'm talking corrections of 20 or even 30% are common, even within a larger bull market. Because it's a much smaller market than gold, its price can be pushed around more easily by large buyers or sellers. And of course, if we were to hit a deep global recession, that industrial demand we talked about could temporarily dry up, and that would hurt the price. So we're left with this question. On one hand, it's an ancient form of money. On the other, it's an indispensable component for our most advanced technologies. The answer to whether it's a relic or the future? Well, that will likely determine where its price goes from here. Thanks for watching.